The CEO of Restaurant Brands International, Jose Cil. Nice to have you here.
Great to be here.
Did you expect that Popeyes would receive quite as much marketing, unpaid for marketing as it received for that introduction to that sandwich?
We were really excited about the launch of the chicken sandwich. We spent a lot of time working on a best-in-class sandwich. The heritage of Popeyes has always been about culinary excellence, and so we felt we had something really special for simple but amazing ingredients, a chicken fillet, a bun, pickles, and mayonnaise, and we were ready for something big. And then we broke the internet in early August, and that created a craze that I haven't seen in more than 2 decades in the business. So we were excited, not prepared for the craze, but we're ready to deliver.
Now you're ready. So what went on between the time that you had to stop and now started again in terms of what did you actually have to do to be ready?
So we work closely with our franchise restaurant owners and with our teams at Popeyes to make sure we had great product, we had the supply chain ready to deliver at higher levels, and then we worked operationally with our franchise owners to make sure they invested in people and in equipment, additional people and equipment to make sure we were ready for higher volumes that we saw at that time.
Why do you think that the supply chain wasn't ready to begin with? Did you underestimate the craze that would, circle this chicken? I mean, it seems like, based on the simplicity that you described, bun, chicken, pickles, all those things seem like they're in ready supply from a supply chain standpoint.
Yeah, we spent almost a year testing the product in many markets around the U.S. We started in Houston and then rolled it out to a bunch of different markets, and we expected big volumes. We prepared for big volumes and actually had a cushion as well beyond what we saw in the test markets. And then with this exchange that happened, the so-called chicken wars on the internet, we saw volumes that far exceeded anybody's expectations. So we were ready, but not for what happened.
It's why some believe that the shortage was manufactured somehow to build virality online. Any response to that?
Look, we're excited to be back online with the product, and our franchise owners are delivering a great experience to our guests. So we're excited about where we are.
So Popeyes does a 10% comp, a big number, and yet Hortons offsets a lot of that. What's going on at Hortons?
So Tim's is a great brand, dominant position in Canada. It's been a dominant brand there for decades and decades. We have 4,000 restaurants. We have more than 1,200 amazing restaurant owners that do a great job every day in their communities and in their restaurants. So we feel good about the long-term plans. We're working on some important initiatives around restaurant experience, around product excellence, around brand communications, connecting back with our communities. So we feel good about the long-term plans.
Well, how do you feel about the short term?
Well, from time to time, we'll see some ups and downs in the business, but we feel good about the long term. We shared the results for the quarter. We think overall, on a consolidated basis, RBI had a great quarter, nearly 9% system-wide sales growth and EBITDA growth of nearly 7%, which was one of the best quarters we've had in a bit of time. So we're excited about the path forward. We're excited about the plan and look forward to continuing to deliver on that plan.
So Hortons has Beyond Meat for its breakfast sausage. Burger King uses the Impossible Burger for its Whopper. How do you describe working with both of those two suppliers in terms of what consumers like better, in terms of the actual supply chain for getting those ingredients?
Yeah, we're a brand-led company, so the brand teams for Burger King in the U.S. and for Tim's in Canada did the work locally and with their guests to figure out what taste profile better matched what the consumers are looking for. And so we decided with Burger King and flame grilling in the U.S., the right product was the Impossible product. And in Canada, we felt that Beyond Meat was the right product. So both are exceptional providers and partners, and we're excited about being able to deliver great products to our guests in Canada, in the U.S., and all around the world.
A couple of different things going on in the burger world. Shake Shack yesterday reported numbers that were not well received, in part because they're going exclusive with Grubhub. I don't know what your delivery options are, or whether you'll see any sort of an impact from the similar decision. Can you share that?
No, we felt since the beginning of the delivery business for us, we started at the beginning of 2018, and now it represents a big part of our business and a growing part of our business in the U.S. and Canada and all around the world. We have some markets internationally that have somewhere in the neighborhood of 60, 70% delivery business. So it's a big part of our business. We always felt that working with the third-party aggregators was incremental. So we didn't have any exclusive partnerships. We have great partnerships with each of the aggregators that we work with, but they're incremental to each other, and we feel that's the right path forward.
That's the way to go.
Yeah.
And some changes, significant ones at McDonald's in terms of leadership. Is that an opportunity for you guys at all?
Look, we're always focused on delivering great experiences to the guests. I think what happens from time to time at an executive level, we don't really comment on or even worry too much about. We focus on delivering great products to our guests every day, everywhere, and working with our partners to make sure we deliver really profitable results for them.
What about in terms of M&A? Obviously, Restaurant Brands, the whole ethos of the company really came about due to M&A, with 3G teaming up Burger King to acquire Tim Hortons, later Popeyes. This morning, Bloomin' Brands is up about 7% on news that they plan to pursue strategic alternatives for their business due to activist pressure. Are you looking to do more? Would something like a Bloomin' Brands be a good fit for your portfolio?
What's exciting about our company is that we're a growth company. We've seen good results over many quarters and many years, and we have a ton of optionality with our business. We can invest our cash flow, which we generate quite a bit of. We can invest it in the business. We can invest it back to shareholders through repurchases as well as dividends. And we can also invest opportunistically in M&A. We haven't done so recently, other than Popeyes and Tim Hortons, but we'll look at it when the opportunities arise, and we'll consider it accordingly.